Welcome to another episode of There's Insurance for That, your number one destination for all things insurance. We are your hosts. I am Nate Brown.
And I'm Edwin Moreno, and today we will be talking about life insurance and personal insurance. So, when I say personal insurance, I'm talking about your home insurance and your auto insurance. And when I'm talking about life insurance, I'm talking about your term insurance and your whole life insurance. I say we start with the life insurance because there's so many commercials, there's so much advertisement
So much.
about $1 a day, a dollar a day, get your whole family covered, but like they don't really explain what that even is. And so I think there's a lot of people kind of calling those numbers, and then when they get a quote they get sticker shock because like I thought it was going to be $1 a day, and then it's like, well, no, it's not. So
They
yeah,
get
man,
hot.
talk to me.
Bro, these commercials be advertising. I mean, it's good advertising, but it's such a bait and switch technique. Like $1 a month. I mean, anybody, yes, you can get a life insurance policy for $30 a month. It's not going to be that much coverage. You know what I mean? It's not. Like you get what you pay for. So you can be like, I got life insurance, $1 a day. Yeah. When you pass away, by the time they, emotionally put your family to get you in this expensive casket, you're like, what else do we get? Where are the children? And you're like, oh, nothing. It's all spent on this casket at $30 a month.
Right.
You know, you know what I mean? So
That's
yeah,
real.
you gotta
That's
know
real.
what you're getting. Like these smooth talking commercials and even the whole life ones. They got these ones for seniors that are like guaranteed coverage, 9.95 a month. And what they don't tell you, this whole life never expires, lasts forever. 9.95. And so these people on Social Security, they're broke. They're like, yeah, I'm calling 9.95 Colonial Penn. I don't even know how many of those things I replaced. Shout out to Colonial Penn. You got great marketing, but when people realize it's 9.95 per $1,000 of coverage. So like I want
Ah,
10,000. Oh, it's gonna be $100. We need 50,000 in coverage. Yep, that's going to be $500. But you said 9.95, no medical questions asked. Yeah, it is 9.95 for $1,000. That's barely going to get flowers on top of your casket. That's it.
dang. I didn't even think about. Okay, okay. I didn't even think about that. That makes so much sense, though. It's like, yeah, that's the price, but like, what do you get? So 1,000, but 995 for $1,000. So someone can
Yeah,
start with that, but what are you gonna? There's no generational wealth you could build with $1,000, like
can't get a
like life insurance
generational
policy,
flower with
right?
that.
Yeah,
No,
like you said, like you can't even get the flowers. You can't even get the flowers for the casket with
no.
that. So let me ask you this. Okay, so I think so that sounds like that's whole life because what you're saying is you're guaranteed that price. It stays the same. So like, so what's the difference? Like, what's term life insurance? What's whole life insurance? Like, what's the difference
Good
between the
question.
two?
So we got term life and whole life. Term life is temporary. Term life is like renting life insurance for either 10, 20, or 30 years. You can't go past that. And if you do go past that, if you got a 30-year policy and it expires and you want to renew it, it's going to be through the roof because you're going to be 30 years older than you were when you first got it. So your life expectancy is shorter. So if you had half a million before, at 30 years old, and then you're 60, I want a half a million for $150. They're going to be like, you got less than 20 years. Maybe you're not going to get that for 30, for 40, $50. It's going to run you 1,200 or something crazy, so
Right.
term is temporary and it's usually in 10-year increments. So 10, 20, or 30 years. There's a few carriers that have like 15, 25 in between, but 30 years is it. So it expires at the end. So a lot of people, they'll have coverage, and if you outlive that coverage, it's gone. You've given money out to the insurance carrier for 30 years, 10, 20 years, whatever. After that, it's gone. That's the contract. Now, it does give you more money, so they offer you more money as a term. That the life insurance company, it's a business. They're saying, hey, we're taking a gamble here. If you pass away within this time frame, we're going to cough out a big old check. But if you outlive it, we keep what you've given us, we're investing it to pay out premiums to other people, that do pass away in that time. So in term policies, the national average is less than 2% that actually pay out, which means about 98.5% of people outlive their term. So
Wow.
it's good to have. I have one, but it's not the end all be all. You kind of want to mix it up, have a little bit of this, little bit of that. So it's a lower cost, and that's what usually is the most attractive situation. So when you see those
Right.
$1 a day, if you read the small print on the commercial, or it'll be like a little asterisk, it will say rate based on a 25-year-old female, healthy female. So
That's a
life
good point.
insurance
So,
costs less for females than it does for men. Men have shorter life expectancies, ladies have longer, so it costs less for them. So you can get that attractive looking number to put on TV. So it's not a lie, but it's not the most common scenario for somebody who's actually
right. So
buying
you're
life.
telling me, so you're telling me that the number, they're basing this number on this one like this one demographic that's very, like it's small. Like it's like you're telling me like this is the cost, but this is the cost for this one individual. I'm not a 25-year-old female. You know what I mean? Like, I mean, there's a lot of people that aren't that. So, but I wanted to ask you, and I want to make sure I understand this right. So, and also like for the listeners more than anything else, it's like what you're saying when you say it expires, it runs out. It's like if I get a 10-year term, my price is gonna stay the same for only those 10 years. After
Mhm.
that, like they don't owe me that price anymore. They're like you said, like I'm renting that price for 10 years
At that age. Yeah.
at that age.
Yeah, so they run off morbidity rates, like the national morbidity rate. So they know if most men in the 2000 at this time are expected to live to 80, 90 maybe. Used to be like 65. Now we're living a little longer. They kind of
Right.
stretch it out to kind of meet that parameter. It goes up to age 121, nothing past that, either term or whole life, but they don't even let you get a term policy after age 65. So they like, nope, it's no 10
Too
year, 20
close.
year, 30 year
Too
here.
close. You too close.
Right.
Too close. You're too
Like
close.
any day now, we're not going to take that risk. So you can't
Yeah,
get
you're
a
gonna
job
croak,
after
man. You're gonna
65.
croak any day, bro. There's no way we're gonna
Yeah.
want to cover you right now.
But
Okay. So that's
yeah.
term, and then so what's whole life?
Whole life, whole life costs more because it's permanent. Lasts you forever. So it lasts your entire life. As long as you're paying the premiums, it'll last you your whole life. So it expires when you expire. That's what I like to say. It expires when you expire. Whenever that day is, the cool thing about whole life, again, you get what you pay for. Whole life, they know you're going to do this for the long term. So they kind of have what's called a cash value life insurance or cash value savings account built inside of a whole life policy. So a percentage of your monthly premium is going into a sub account that's called your cash value account. And that money is there for you to use while you're living. Like run it up. It's earning compound interest every year. You don't have to say what you need it for. You can either take it out as a withdrawal, which means it's considered taxable income, which is fine, or you can take it out as a policy loan, which under IRS code 7702-A, listeners, 7702-A, if you take it out as a policy loan, you never have to pay taxes on that money. And even as it's growing in your policy, you never have to pay taxes on the annual growth either. So that's cool. The cost is a little more than term, almost about twice as much, for the same amount
Okay.
of coverage. And it's based on your health. Depends on how healthy you are. You can be young, but if you got bad health, it's a wrap. It's very
They
hard to
won't. I mean,
get
the price.
covered.
So you're saying either the price is really high, or they just be like, nope, we're not gonna cover you.
Well, they do have whole life called guaranteed issue whole life, which means they won't ask any medical questions. But they pretty much assume if you're getting a guaranteed issue, something's jacked up. So
Right.
they only give you us up to a certain amount of coverage, like 25 grand, maybe 50 with some cares. They will not let you get a high death benefit. They're like, yeah, we know you either got, cancer 2 years ago, or you know what I mean? Or you got something, you just got a ugly diagnosis and you know it's a wrap soon. So we gonna give you about 25,000 or so. And it's gonna cost a little bit more than a healthy person with whole life because we know it's inevitable. It's inevitably sooner than later. So they
Right.
will guarantee the coverage, but there's a 2-year clause on that. So you can't be like, dude, true story. God bless them. I had somebody, I'm not saying names because they are somebody who's near and dear to me, his family. They called me and said, hey, we need a policy on my aunt. She's has cancer. I said, hey, guaranteed issue. I didn't ask any questions. Cancer, all right, guaranteed issue. I already know. No one's going to cover that except for guaranteed issue. They did the application on a Friday, which means they're not, the underwriter probably wasn't going to get to it till Monday. So they called me Sunday night. It's like, hey, she passed away. What about that life insurance policy? I said, yeah, about that. Remember the clause I told you? If they pass away within 2 years, you only get 100%, 110% of the premiums that you paid. That's what you get. Well, because the underwriter didn't even get to this and you didn't pay a premium yet, we just submitted an application. There's nothing that we could do at this point. Y'all,
Oh,
y'all gonna have to go call everybody for 5, 10, $100, fish fry, something, it was bad. It was unfortunate. I was like, dang. So it was a relative's relative. So yeah, like those policies are out there, but don't wait to the last minute. And like on the hospital bed, it's kind of, yeah, it's not, you know what I mean? The time to put in the call, we should get it while we're younger and healthier. But yeah, that's whole life. It lasts your whole life, has money growing in it, a little higher cost, has living benefits. So if you do get a critical, chronic, or even a terminal illness with enough time, you could pull money from the death benefit and say, hey, I want to take care of some money things here, or hey, I never been to Japan. Shoot, y'all told me I got how long, Doc? 12 months. All right, I'm going to visit everywhere I'm going. You know what I mean? Like they have those things there in place. You don't get those with term. You don't have living benefits with most terms. Over the past couple years, some terms have raised their premium to include living benefits. Like a few carriers have
okay.
done that. They're very competitive. They're always trying to do that. Last thing about the term is that they have something called a ROP. Some carriers have what's called a return of premium option, which means if nothing happens in that 10, 20, they don't even offer it with 10. Some offer it with 20, but and then more offer it with 30. If you happen to have paid a premium for 30 years, there are some carriers that will give you up to 75% of that money back. Like that's that's the
Okay.
that's the best you'll get out of that. Because they know if you wanted to keep insurance after that, it's gonna cost you a pretty penny. So
Right.
yeah, that's kind
Right.
of the
Okay.
difference between the two in a nutshell.
So no, I mean that's intricate. And it's like it seems to me like it depends on your situation, right? Like it seems to me like it should take more of a conversation because like I'm thinking about if I'm quoting someone's home and auto, I got one of my companies that they'll just shoot out a life insurance quote for me. They'll be like, "Oh, you did the home and auto." They'll look at like the person's credit score. They'll look at like just like the kind of like the outline of the person, and they'll say,
Yeah,
"Okay, here's a price. Like here's a price for term life insurance." 15, it's like they do like 10, 20, like or something like that, 20 or 30-year term. And that's it. And so for me, it's like, oh, some people I've been told like, oh, that's mortgage insurance. But I'm like, well, I don't know if they still owe on their mortgage. I don't like there's a lot more to that for me. So I'm like, I
it's
believe I should have more of a conversation before just presenting this to them. And so
yeah.
I would rather have a professional, you know what I mean?
How does that work? Because I mean, it's funny because all right, I'll dispel the rumor. It's not a rumor. It works. But a, a term is often used for what we call mortgage protection. If you got a 30-year mortgage, they take a 30-year term for the price of the house. If something happens to you, the house is paid for guaranteed. And that's different than PMI insurance. You know what I mean? That
Right.
carries the lender, but you do something totally different though. So hold on. So that just covers the cost of the mortgage and or give money to the family after if they've paid half of it off in 15 years and then
Maybe.
passed
And the
away.
reason, I mean,
But what
and the
about
reason why
home
they're doing is
insurance? That's
because
different.
when you do an auto insurance quote, they ask you for like your driver's license info, you know?
Yeah.
So when I'm doing someone's home and auto, they're like, oh, we got the driver's license info, and then that has your date of birth and that has your weight. I don't know how updated it is, right? But that driver's license info has that. So the insurance company's like, okay, based off this, we could do a life insurance quote. So that's kind of why they just like and you know they look at the driving record. Oh, this person is like safe, like they haven't had any accidents, like we could give them a decent price, right? So
Okay.
they're kind of like so I see why they're doing it, and then again, like the salespeople are like sales managers or well, no, do it for this, and it's like, well, no, yeah, but then it's like, well, now it's a little different at the agency because like we have a whole like, all right, there's a department that handles that stuff, and so now we're having different like you, man, like you're a specialist in what you do. So for me, when I'm talking to someone, I'm more like, well, let's look at your auto insurance, let's look at your home, and then let's look at that scenario first. Like for auto, for example, some people are like, oh, let me get like I want full coverage, and I'm like,
Mm.
there's no such thing. Like there is no like when you get an when I go to quote when I go on my quoting system, I don't there's no way for me to just click full coverage and then it's like
So
you're fully
so
covered.
full coverage does not cover everything. It doesn't cover any and everything that could happen to
It,
your car.
it might not like some people so some people think full coverage is comprehensive and collision, for example,
Yeah.
right? So
Like
it's liability, comprehensive, collision. Okay. And
okay.
what does that mean?
I understand. Yeah, I'm about to say break that down because I only
yeah,
understand truly, and that came from last week's pod, broke
right.
down liability pretty good. So I understand that now. But comprehension and collision, what are the real
So
terms?
comprehensive. So it's comprehensive. So it's comprehensive coverage. Comp coverage is while the vehicle is parked. That's basically it.
Why you're
Comp
not
coverage,
here?
it's car comp coverage is the vehicle's parked, no one's driving it, and there's damage caused to it. Hailstorm, tree falls on it, someone crashes into it and leaves. Like
Okay,
that's comp.
okay. Okay, I got a real life situation then. How does this work? I was at I was at Sam's Club, some one of them on the south side, right? I'm parking, and there's a parking spot next to me, and I see a guy, two people kind of looking forward, and one guy, he's like kind of looking, and he turns, and you everybody hear it, and he's like, and he reverses, and sure enough, he turned too sharp and hit the parked car that was on the other side, and I guess he sat there waiting. I guess he waited for somebody. I left. I said, "Ooh."
That's
So it's a
collision.
parked
So
car. The
so the
person,
person
yeah.
driving,
How
the
does that
person
work?
driving is collision. That's
Okay.
their collision coverage. The person parked, that's their comp coverage.
Okay. What about the liability? Does that have a factor? Like, is that guy who was driving's liability to fix something, or because, okay, I think I got it. Because he hit someone who was hit a parked car, nobody driving, it falls under the comprehensive side of it. Okay.
Exactly. Well, if
Yeah.
for the parked car, like
Yeah, for the parked
it's
car.
just two. But there's the scenario you gave has two different policy holders.
Okay. Break it
So
down.
so the policy is gonna react differently for each individual.
Hmm.
So me, I crashed into someone. I caused property damage. That's my liability,
Got you.
right? So that falls under liability for me because
Hmm.
it's like remember I broke it down like it's like you have liability protection, bodily injury. So it's like the people that you injure in other vehicles, and
Yeah.
then it's the whole amount that you have for the people that you injure. In the state of Illinois, the minimum is like 25, 50, 25. So it's like 25,000 per person, 50,000 per accident, and then 25,000 for property damage when you cause property damage to someone else.
Got
Okay.
you.
So let me tell you this. Let's say I don't know what kind of car this person crashed into, but this
Oh
scenario
no.
is a great example because let's say it was a I don't know, it's just a 120,000. It was a Bentley. Like let's say it was a Bentley. that this person crashed into, right? Okay. And then they have minimum coverages. They're one of the people that were like, I just want minimum. Just give me the state minimum. I just want to make
Oh,
sure I'm legal. There's a lot of people that say that to me. I just want to make sure I'm legal. Right.
yeah.
So then they get the state minimum. The property damage minimum is 25,000. I mean, it might be 15,000 to be honest with you, but the property damage minimum is very low. This person just crashed into this car. Let's say they take the car to the shop and they're like, look, like we can't fix this without removing the entire, like without removing all this, doing all this. Like this is a total loss. Like you might as well just like you might as well just get a new car because it's not
Mhm.
going to end up the same if we try fixing this, right? And then now this person has to get a brand new $120,000 car, right? Because it's a
Ouch.
Bentley and it's steel. It's just a different, like it's just the
Yeah.
manufacturing is different. So like you got to get a brand new car. The policy only has 25,000 in property damage. Who's gonna pay the rest for this car?
So that's still so does that still fall on if the person hit me, they only got 25,000 liability, and I may only have 50,000 comprehension. So that means I'm still
Your
out.
comprehension, your comp doesn't matter there because that person hit you, so their coverage should cover your policy,
But if
should
it
cover
don't,
your
that
car.
means I have to go from a Bentley to a Nissan.
You're not gonna want to do that. You're not gonna want to do it. So now you're gonna file a claim for your Bentley.
Okay.
And then now your comp coverage kicks in because you filed a claim.
So after I get money from the person who hit me and it's not
You
enough,
know,
then I have to file a claim
what's
to
gonna
get
go,
the
it's gonna
rest.
be like it's gonna be back and forth. It's gonna be a lot of back and forth. And your company's like, look, just file a claim so we can cover this and we can try to recover that money from the other company.
Okay.
So now the other company is gonna pay out the total. They're gonna say, all right, well, we have 25,000. Here you go. Now the insured, the person that hit you, they're gonna be like, well, wait a minute, what about the other 95,000 I gotta like that has to be paid for this car? Oh, well, that's on you. I don't know.
Dang. So that guy, if he didn't hit us, I mean, it wasn't a Bentley, but if he hit a really expensive car, that's the rest of that guy come out of his personal pockets because he only is up to oh wow. Okay. So if you hit a oh goodness.
But see,
Wow.
that's why having the minimum coverages isn't the way to go because
Those are the
you're
minimums.
that's the minimum. The minimums,
Okay.
it's dangerous because even hospital bills, man. Let's say you crash into someone and there's four people in the car, they all got to go to the hospital. You got minimum payments. You only have 25,000 per person, and you got 50,000 for the whole accident. What if each person? What if it costs 50,000 for each person? That's four people. That's $200,000 right there.
You are
You
broke.
got the minimum. They're gonna pay 50,000. The insurance company's gonna pay 50,000 happily. Here, 50,000. We'll take that
Well,
covers that's your policy total. Who's gonna pay the rest? $150,000 to cover their hospital expenses.
mm,
You.
so for the listeners, for if you got an expensive car, a luxury car, I don't think you want the state minimum. I think you want to you want to go ahead and make sure you at least got a six-figure comprehension collision or something because
Well,
your
yeah, the
car
comprehensive, so at least a six-figure liability. That's what I'll say. Because
liability.
your
Okay.
comprehensive and collision just goes on like based on the value of your car.
Oh, okay,
There's
okay,
really
okay.
yeah, they're just like, all right, what's the value of this car? And then the only thing you got to worry about is the deductible. That's like your $500 deductible, your $1,000 deductible, you know?
Gotcha.
But then there's towing. I think we talked last time. You said, "Oh man, my glass, something happened to my glass."
Yeah,
And I'm like, "Yeah, like
windshield
you could
coverage and
yeah, you can have like a windshield, like this glass coverage where your deductible for the glass is a lot lower than the deductible for the comp and the collision. So you can have a
but you
separate
have to
deductible for your
say that
glass.
when you buy insurance. You gotta say, oh,
You
I
have to.
also need. So I didn't even know that was a thing. I didn't know, oh, by the way, windshield. I thought that was probably included in collision or something.
It it is included, so you got to pay that. So what's the point though of having it if you got to pay $500 deductible? You know what I mean?
In the window, like $300. Yeah, it's like,
Yeah, so you could get a separate deductible for the window where it's like a $50 deductible for the window. So now you just pay $50 to replace the whole window.
okay.
Like
Okay.
that makes sense to do it that way. But some a lot of people that will not just pay out of pocket because I have a $500 deductible, but you could add something for that. So like full coverage is more than just full coverage is my point. It's like,
Mhm.
let's like talk about each level. There's towing coverage. There is like gap coverage, right? What happens if like, you owe on this car more than what the car is worth? So
Yeah.
there's all these different layers of protection that it's good to talk about. There's something called uninsured motorist coverage.
Yeah.
So like if you crash, if I crash into someone, no, let me word it differently. If someone crashes into me and they don't have insurance, my policy, there's a separate limit that will cover my car because that person that crashed into me doesn't have insurance.
I have insurance. Okay.
You
Man, there's so
know?
many levels to this thing, man. So, all right, one day I want to have a McLaren. I'm probably going to need to have top-notch life insurance. So, because it's things that again you don't know what you don't know. Now, from what I understand, because they're so low to the ground, one of the biggest things that in maintenance people have to get dinged for is their tires. Like the scrap the it's Chicago, it's pothole city. You know what I mean? Are these like separate coverages that are because it kind of falls into wear and tear. I don't even know if there's coverage for that.
No, that's separate. That's like warranty stuff.
So,
That's just
mm,
different.
so you just
That's a whole other realm and is
okay,
not
we just
included
go
in
for
your
that.
standard like auto insurance policy. The
Wow.
main thing is your liability, the damages to your vehicle and the medical payments for your passengers.
I
Like
got a
your
question
liability
for you.
policy includes medical payments for passengers in your car too.
So I'm getting this. I hope the listeners are getting this for auto, but I got a question about home. Because say home and
Yeah.
auto. PMI is not home insurance. Mortgage protection is not home insurance. Can you just quickly break down in home insurance, what does that cover? Like what's covered in home insurance for those who don't know?
Yeah, so there's a couple things. One is your liability is also covered in home insurance.
Like
So
if I
I'll
mess
give
up
you an
something,
example.
if I break
No,
something in the
if
house, or
someone, no, I'm gonna give you an example. Someone comes into your home and you invited them, and there's like you mopped the floor, but you forgot to like let them know, yo, the floor is wet. So they just fall and they do a split, not expectantly, and they freaking tear something, and they're just like, I gotta go to the hospital. Now they can't work for a bit, but this happened in your home. Technically, you're liable for their injury. So they can sue
oh,
you because they were injured in your home.
what?
So that's liability. Another example, I
My
had
neck
this.
and
This
my
is a real
back.
scenario. This is a real scenario. There was a kid playing in the side of a house, and the tuck pointing was loose. They didn't know the homeowner didn't know the tuck pointing was loose. A piece of brick fell and hit the kid on the head. Fortunately, the kid didn't die, but that's a liability claim on the owner of the home.
Yeah. No, is that included in home or is that like something
That's
simple cause you
included.
can
That's
okay
included in
include
your
in home?
homeowners. But
Woo.
remember, ask how much coverage you have because a lot of times they just put the minimum.
Yeah.
I've seen some policy with just 100,000. Oh, 100,000, bro, 100,000 go like that
Yeah.
in liability, especially if you're liable for something. I mean, let's say, bro, as simple as like you have a dog and your dog bites someone. That's your liability. That's homeowners. That's your homeowner's liability.
That's
That's your liability.
homeowners
There's
insurance.
so many levels to it. Bro, you're mowing the lawn, a little rock gets caught in the blade, and the rock flies and breaks your neighbor's window. That's liability. That's your liability.
You're liable for their damage. Okay.
Bro, your home catches on fire. Because of your home catching on fire, the smoke, the fire goes, blows, and gets on someone else's home. Their home is on fire. That's your liability.
Man.
So
So
there's all these. there's all these
So
things that like so that's a
I
start. That's your
Yeah, I
liability.
got so many questions right now popping through my head. Like, I'm like, you said, if I come thinking about California, all those fires that were happening, I'm
Well,
sure
that's
they
why
were going house to house. And they probably people like, is that why the insurance company, some people are like, we're not paying for because we don't even know who to blame. It's like the whole city's on fire. Is that why they kind of were weaseling out of that deal?
that's exactly why. That's exactly why. There's like different clauses. There's like things that weren't covered because people didn't pay for that exactly, or there's certain areas that people didn't know that they were in that area. Insurance companies, a lot of insurance companies had to pull out of there. They're just like, we're just not insuring here anymore.
Oh, wow. And they
You
could
know,
do,
especially after the wildfires. Yeah, so that's liability. So then you have the property, like the actual home,
hmm
right? Like the building, the home structure, right? And
yeah,
then you have your personal property. What I like to call personal property is like if I flip the home upside down, everything that falls out is like personal property.
got you.
Now, there's a distinction between personal property and valuable products.
Okay, okay.
Not valuable products, what are they like valuable like items like jewelry, trading cards,
Like it's one thing if
like
my couch catches a fire, but it's another thing if $1 million trading card or special coin or postage stamp gets that's it's not all covered the same way, even though it's all in my house.
no, no,
Wow.
because it's a collectible. Collectible has a completely different classification.
Who so wait, see here's where insurance agents y'all need to step up, especially property and casualty, because I promise I'm sure there are people that you got a house, it's on your way, commission. Here you go. They don't tell you or ask you, hey, you plan on putting, you know, a big art piece on the wall. It's expensive this. Like, do you have any? And most people are like, I don't want to tell you what I got, but it's like, no, we need to know this so it can be insured. Because if you get water damage to it, fire damage to it, and it's not insured, you're up the creek without a paddle, my friend. And,
Well, right, and then
at least let
legally,
them know. They can say I don't want it, think, but they don't even know.
listen, but what you just said, they could sue me for not telling them because that's what insurance agents need to get errors and omission insurance
It's
for.
E&O right there.
That's
Yup.
E&O. That's why we need E&O. We need E&O because ultimately this happens all the time, bro. You know how many E&O claims there are, like left and right? Because like there's constantly people that are like, I didn't know I could have gotten that covered. I didn't know. That's my agent's fault. All right, yeah, you got to sue the agent.
Dang.
So collectibles is different. Like it's just a different classification. I read of a story where the basement flooded for someone and they had wine, like very valuable wine. They had like some of them were appraised. Like there was there was value to this stuff. It wasn't
Yeah.
covered.
Wow.
It wasn't covered. Like they had just like some other collectibles that they had appraised was not covered because they weren't endorsed on the policy. Like that needs to be endorsed on the policy. So that's property coverage, right? So kind of to give you an idea, personal property and then like collectibles and like precious artifacts. That's separate, but that's under property. And then we need to create they call them riders or endorsements to include those other things. And then or articles, like they call them article floaters or like things like that. And then you have medical payments. So same thing like medical payments. If anyone slips and falls, like besides liability, it starts off with medical payments, and if it goes more than that, then it taps into the liability. And then we have other structures like garage, um, outhouse, just like whatever, like another structure is also covered
Shade.
under your policy. And then you have then you have water backup, right? If water comes up like in the basement, like that happens a lot, and people don't even know that that's a separate coverage. Like
That
that's
happened to a
something that
friend
you
of
have to
mine.
add to your policy.
So if I've had it happen to a near and dear friend of mine here, storm came, something came, city backed up something, and their basement flooded nastily, you know, sewage stuff, gross. And yeah. So if you have the right insurance, whatever's damaged can be covered from that damage. If you don't have insurance, it's coming out your butt. You're paying that out your own wallet. You got to fork up the bill. If if you don't have the coverage and your agent never even told you that that was even possible, then you can sue that person for E&O. Sounds like me telling somebody, hey, I don't tell you, your term is going to expire in 20 years. And they 25, 22 years in, they pass away. And I say, oh, yeah, you only had 20-year term. They can actually come back and be like, you didn't tell us. I'm
Yeah,
suing you.
you didn't tell me that. I mean, I think they would have to they would have to have some proof of
Proof. Yeah.
you saying something besides that, but they could sue you for that. Like
Because
that's like technically like yeah, like technically you could be sued for that for not advising them properly, right?
man,
And
this is good. We're gonna look, time has already came out the hourglass,
hey, that
and
was good though.
this is
I
good.
like
We're getting good. We might have to keep this one going. Another like pick it back up on the next podcast. So,
yeah,
listeners, I hope y'all learned something today. I know I did. So again, that's why we're telling y'all there's insurance for that. You don't know what you need to have covered on your life, on your property, because casualties happen. You know what I mean? Things, and they happen casually, but you better make sure you're not casual with finding out the right type of coverage that you need. So
love
these
it.
are some strong points that were made. I hope you guys are listening. Running back the video if you need to catch up on some things. We'll put our contact information somewhere in the description because if you need property and casualty, and you need questions, you need better policies, talk to Edwin Moreno about what you think you have, what you know you have, what you don't know you have. He's the guy. If you got some
Yeah.
life insurance type of deals, talk to me. I'm gonna make sure I
Shout out
break
to the man Nate.
everything down for you that you need to know so nothing's missing. So tune in next week when we talk about more. There's insurance for that topics. Again, like, comment, subscribe. We're here every Thursday at noon. You'll be seeing our episodes live. Anything you want to add before we get out of here, Edwin?
No, man, this is great. This is great. I just hope people ask questions. Ask questions and we're here to answer them. So take the gems, learn, take the gems, take the gems. Peace.
I'll see y'all next week. Peace.